Restructuring of business is an integral part of the new economic paradigm. As controls and restrictions give way to competition and free trade, restructuring and reorganization become essential. Restructuring usually involves major organizational change such as shift in corporate strategies to meet increased competition or changed market conditions. This activity can take place internally in the form of new investments in plant and machinery, research and development at product and process levels. It can also take place externally through mergers and acquisitions (M&A), by which a firm may acquire another firm or by which joint venture with other firms. The different forms of corporate restructuring in this session will learn different types of corporate restructuring formats. Amalgamation. This type of restructuring involves fusion of one or more companies where the companies lose their individual identity and a new company comes into existence to take over the business of companies being liquidated. Absorption. This type of restructuring involves fusion of a small company with a large company where the smaller company ceases to exist after the merger. The merger of Tata Oil Mills Limited, Tomco, with Hindustan Lever Limited, HLL, is an example of absorption. Tender offer. This involves making a public offer for acquiring the shares of a target company with a view to acquire management control in that company. Asset acquisition. This involves buying assets of another company. The assets may be tangible assets like manufacturing units or intangible like brands. Joint venture. This involves two companies coming whose ownership has changed. Taxi giant Uber and the heavy vehicle manufacturer Volvo entered into a joint venture produce driverless cars. The ratio of the ownership is 50% to 50%. Spin-off. This type of restructuring involves division of company into wholly owned subsidiary of parent company by distribution of all its shares of subsidiary company on pro rata basis. By this way, both the companies viz holding as well as subsidiary company exist and carry on business. Split-ups. This type of restructuring involves the division of parent company into two or more separate companies where parent company ceases to exist after the split-up. Equity carve-out. This restructuring is similar to spin-offs, except that same part of shareholding of this subsidiary company is offered to public through a public issue and the parent company continues to enjoy control over the subsidiary company by holding controlling interest in it. Divestitures. These are sale of segment of a company for cash or for securities to an outside party. Divestitures involve some kind of contraction. Asset sale. This involves sale of tangible or intangible assets of a company to generate cash. A partial sell-off, also called slump sale, involves the sale of a business unit or plant of one firm to another. It is the mirror image of a purchase of a business unit or plant. From the seller's perspective, it is a form of contraction, and from the buyer's point of view it is a form of expansion. Going private. This restructuring involves converting a listed company into a private company by buying back all the outstanding shares from the markets. SunGard was a financial services giant which was taken over by investors and was delisted from the stock markets. Equity buyback. This involves the company buying its own shares back from the market. This results in reduction in the equity capital of the company. This strengthens the promoter's position by increasing his stake in the equity of the company. Leveraged buyouts. This involves raising of capital from the market or institutions by the management to acquire a company on the strength of its assets.